Hello, this is Alex Kazmark for the FXEdge.com, and this is your free daily Forex video for Thursday, November 12th, 2009. Quick reminder before I begin, the purpose of this free daily video is education and not an alert service. I'm not going to make any trade recommendations here, but what I am going to do is point out levels of support and resistance for the next 12 to 24 hours. Please keep in mind that trading with leverage is very risky, so please don't trade any real money until you've established a proven track record of success on a demo account. Trading conditions are always changing, so make sure to watch tomorrow's video to stay updated. Okay, everybody, Sterling was once again the clear loser of the day, losing more than 250 pips before finding support at 165.35. Euro attempted another run at 150.50, but failed. We must now be careful, as failure to break 150.50 may prevent Euro bulls from pushing it higher. Treasury Secretary Geithner once again suggested that he truly believes that a strong dollar policy is in the United States' best interests. We are still looking for opportunities to sell the buck, but as the market continues to hesitate, we should remain cautious. New Zealand retail sales released just a little bit over an hour ago came in worse than expected, yet we expect further New Zealand dollar buying as the market will push this pair to extremes prior to a big reversal sometime in the future. Markets are known to do that. Currently looking at the euro dollar on the daily. As I mentioned earlier, backed away from the 150.50 area. Important thing to watch now is what happens over the next 72 hours, 48 hours prior to the weekend. We'll see if the market continues to consolidate prior to making another run at 150.50. Our first level of resistance is now going to be at 150. Above that will be 150.20. Above that will be 150.50, and 150.60 follows. A break of 150.60 would be the last pivot high. Tried to break through that twice, wasn't successful, backed away. We reversed to the 147.20 level, have now gained some momentum, and we do expect this pair to continue pushing higher. Pound dollar. Support levels. First level of support, 149.50. Below that, we'll be looking for 149.20. This is at the 10-day moving average. Below that, we'll be looking for 148. Our last level of support is going to be at 147.20. Pound dollar, currently trading at 165.80. First level of support is going to be found at 165.20. It's important because, as you can see, we've now set a new pivot high at 168.44, but over the last 2 days, there have been several key factors involved in the selling of the British pound. First, the Fitch rating service came out and said that the UK may be the first one to lose its sovereign debt rating at AAA. And then following yesterday's Bank of England inflation report, the pound further sold off, breaking below the previous day's low and finding support just above the 165.20 level. A break below that is going to target 164.50. Below that, we'll be looking for support at 162.50 and 161.20. First level of resistance is now going to be at 166.40. Above that will be 167 and 167.20. Finally, above that, we'll be looking for 168.44 and 170. Dollar Swissy up next, currently trading at 100.76. Once again, testing the trend line that we've been following. Very, very easy to make pips. Once we see a confirmation that this trend line is in fact an area of resistance for the Swissy, and it acts as a level of support. Even though we see that the dollar continues to lose ground, we can see how we keep bouncing off these levels. First level of support for the dollar is going to be at 100.30, followed by parity. Below parity, we're going to run into support at 98.80. First level of resistance is going to be at the 101 figure. Above that will be 101.30. 102 and 102.80 will be third and fourth level of resistance going to be very important. Breaking above 102 will certainly send it to the 102.80 level. A break above that will target 103.50, and if we manage to close above 102.80, we are most likely going to be reversing the trend, and we'll see further dollar gains. Above 103.50 is going to target 104.50. That's quite a ways, so we're going to keep that out of our notes today and wait to see if we manage to break above the 101.30 level, breaking the last pivot high of 102. Dollar yen. Unfortunately, we set a new pivot low, or at least we may set a new pivot low today, unless the yen continues to gain strength and breaks below yesterday's low. We broke the 89.50 level of support that we saw here on our last pivot. With that being the case, we are expecting further yen strength. It is possible that that may not happen and the dollar continues to recover. If that is the first, if that does occur, our first level of resistance is going to be at the 90.80 level, followed by 91.50 and 92. Above 92, we'll see 92.30 and 93.20. First level of support for the dollar could be found at 89.50. Below that, we'll be looking for 88.80 and 88.20. Below that is 87.20. Believe it is important that we close below the 89.50 level in order for the yen to continue gaining strength. Until then, we can continue to bounce off this 89.50 level, even though we do wick down. It's possible that the fact that we're not able to close below this level is supporting the dollar, and we may see a further dollar rally. If you'd like a more detailed analysis with potential trade opportunities, please join us in the members section. This has been Alex Kaczmarek for the FXEdge.com free daily Forex video for November 12th, 2009. Until tomorrow, good luck trading.